Hello everyone, this is Todd with TradeLeverage.com, and today I just wanted to share with you a classic flag pattern breakout on the dollar-yen that occurred on the 14th of October, and just take you through this trade setup and buy and sell entry and the results of it. I've got the 4-hour dollar-yen chart up here, and as you can see, I have put in here the classic flag pattern, okay, and you've got to get good to recognize these patterns because you're always going to be looking for your most favorable trade setups. And if you're not good at these, we're going to cover these as time goes on and hopefully get you up to speed with recognizing these patterns and then trading them successfully. So what I have here is the pole itself and then the flag, okay? And these are basically areas of consolidation with price and then giving you an indication when price is going to break out. Also crucial to this trade setup is support and resistance zones, knowing where price currently is in relation to support or resistance. Typically when these patterns form upon a strong region of resistance or support, that's where you're really going to see a breakout, and that's probably going to be sizable. In this case, you can see this particular breakout was approximately 90 pips or so. And so if we look at the 4-hour, you can see that price did eventually break out of this flag pattern, but where to trade it is you want to move from the strongest indications of a pattern are going to be on the highest chart, be it weekly, daily, hourly, and so forth. So in the 4-hour chart, we see this happening. We're going to go down and let's drill down to the 1-hour chart. You can see the same pattern here. We have a strong move within the hour of over 40 pips. Again, you don't want to necessarily trade off the hourly at all times. If we look at the 15-minute chart, we can see also that this did break above here. We want to look for at least 10 pips above before we set a buy signal, because sometimes you'll get a false breakout. So let's take above this bar here. We've got 9 pips there, so, and there's our 10 pips. So what we would normally do here is trade off of the high of this bar here. And over here, do not enter until after that signal. Okay, so we have our boundaries here above the high of this bar here. Now, as far as stop loss goes, we're going to look for areas of consolidation, more specifically a support here right at this 89.35 price. And from that buy point, that's going to give us a loss potential. I would set it normally just outside, so let's go down here on, let's say here, 89.28, so potential for 41 pips of a loss. And on the up, I have high of roughly, or more precisely here, 97 pips, 96 pips or so, and then a trailing stop in the midterm of about 48 pips. So if you took this trade, you can see price did above initial signal and push further. Very important in place. The most dominant one coming from the 4-hour chart and the day here. And this here is where you're going to benefit from trailing stop in case price does run into some weaker resistance here. But you can see where this flag pattern turned to a very profitable trade, and then price is once again consolidating around a previous resistance level, and we're going to find out where it goes from there. So like I said, we're going to get into these type of trades in more detail, how to go about setting up support and resistance, and how to recognize instantly these different types of patterns, and then the breakout factors behind them, and see where we go from there. So until next time, happy trading.